Hello everyone, this is Edward here with another video. In this video, I'm going to talk about double candlestick patterns, bullish and bearish engulfing patterns. As I said before, every Forex trader needs to know all these reversal patterns and we should know how to identify all these patterns on the chart. After explaining these patterns, I will go through a couple examples on the chart and I will explain it better. Before beginning, please make sure to subscribe to our channel and push that notification button so you won't miss any upcoming contents. Thank you so much everyone and see you guys after the intro. Bullish engulfing pattern. A bullish engulfing candlestick pattern occurs at the end of a downtrend. It consists of two candles, with the first candle having a relatively small body and short shadows, also known as wicks. The second candle, on the other hand, has longer wicks and a real body that engulfs the body of the previous candle. So let me show it better on this figure. The second candle, which is this one, the green one, covers the entire first candle, which is red one. You can see this one, and we have more volatility on second candle. As you can see, the second candle is bigger in compared to the first candle. It covers a bigger part of the market, which it means there was more volatility at that time in the market. Also, for an ideal pattern, the closing price of the second candle, which is here, should be higher than the highest point of the prior candle. This scenario gives further significance to the second candle and shows that the bulls have control over the price action now. The ideology behind the bullish engulfing pattern is that the second candle is powerful enough to initiate a new trend. Since the low of the second candle is lower than the low of the first candle, it signals that the bulls were able to push the price action from the session lows to higher prices, which is not seen during the first prior session. Alright, let's go on the chart and find a couple examples. Alright, we are here. Euro NZD, Euro against New Zealand dollar 4-hour time frame. I found a bullish engulfing pattern here. As you can see, let me show it better. After this pattern, the uptrend begins and the market starts going up. As we explained, the second candle is bigger than the first one and the close price is upper than the previous one. So we can say buyers have more power in compared to sellers. I found a couple more examples. Let me explain them. So this one, downtrend, and after this pattern we have the uptrend here. Or another one, we have this downtrend here and reverse to the uptrend. You can see the bullish engulfing pattern here. The second candle is bigger than the first one in this one and in the other one. Also another example, this one, we had a downtrend here and after uptrend. These all consider as bullish engulfing patterns. The second candle is bigger and it has more volatility. Also, as we talked about before, these reversal patterns have more credit when they are on support and resistance levels, and bigger time frame, for example 4-hour or daily time frame, have more credit. Bearish engulfing pattern. A bearish engulfing pattern is the complete opposite of a bullish engulfing pattern. It appears in an uptrend. Here, a bearish candle engulfs a bullish candle, which shows that there is going to be a bearish reversal confirmation. The concept behind this pattern explains that the buyers' power decline in the market and then sellers get the power and push the price downward. The big red bearish candle can confirm this reversal. By seeing this pattern after the second candle close, it is best to open a short position with a stop loss top of the highest point. Let me show it better. So when this candle, the second candle close, we can open a short position somewhere here, which is maybe here or here, with a stop loss here at this level. It should be a good short position with a logical stop loss. Alright, I'm here on GBP JPY, Great British Pound against Japanese Yen, 1 hour time frame. I found one example here. Let me explain it better. So this is the uptrend here, and after this bearish engulfing pattern, the downtrend begins, and we have a downtrend here. So the second candle engulfs the first one, and we can see more volatility on the second candle. For example, this one, we had an uptrend here, and after this bearish pattern, the downtrend begins. As you can see, the second candle engulfs the first one, and after that the downtrend begins. Another example, you can see the first candle is smaller and the second candle is bigger and completely engulfs the first candle. Also, we can see the more volatility on the second candle. Uptrend here and then downtrend. After reviewing this double candle pattern, there is one important thing I like to mention. In the previous video, we talked about single candle pattern, and I want to explain these bearish and bullish patterns are actually hammer and shooting star. Let me explain it on the picture. As you can see, I have this bearish engulfing pattern here. So we said this is my bullish candle, this is my green candle, and this is my red candle. This is my bearish candle. So I would say on the first candle, the opening price is this level and the close price is this level. So we would say if we mix these two candles together, we will have something like this. Why? Because this is the opening price, opening level for the first candle, this level, and this is the closing level, closing price for the second candle, for the red candle. So if we mix these two candles, we're going to have a candle, a body from here, the opening, to here, and because the closing is lower than the open, we will have a red main body in this area, and we have a shadow from this level to the highest point, which is here, and we have a lower shadow from this level to the lowest point. So it would be this one here, and this candle is the same as shooting star as we talked about in the previous video. This may look surprising, but my main goal to explain it is because there are same ideology and same trading strategy behind all these patterns. As you can see, I have this bullish engulfing pattern here. The opening price for the first candle is here, and the closing price for the second candle is here, this level. If we mix these two candles, we will have a single candle with the opening price at this level and closing price at this level, and the lower shadow will be somewhere from here to the lowest point, which is here at this level, and we will have an upper shadow from the main body to the highest point, which is this level. As you can see, we have a hammer pattern here, and my main goal to explain all these things is to say that we are having the same ideology and same trading strategy behind this pattern. So I would say bullish engulfing pattern and hammer pattern are actually the same thing, and when we are seeing these ones on the chart, we should have the same ideology and same trading strategy for both of them. Okay, alright, we're done for this session, and I hope you guys found this content interesting and useful. If you like our video, please don't forget to like and subscribe to our channel. Thank you so much everyone for watching, and see you guys on the next video.